Greetings all, Ben here from East West. I'm just going to have a look at energy fuels today. Obviously, it was a little bit going on there, and I just think a couple of things have been thrown up here that are of some interest to the technicians. So let's go and have a look. And so the news today was about energy fuels commencing production at 3 uranium mines. So we finished up 8.76% today, which is pretty good. But I think I sort of looked at this and went, oh, okay, well, I knew that energy fuels had sort of looked a bit different from some of the other stocks, and it looked like it had been struggling for various reasons. But obviously here, we're it's going to add some more supply into the market. So, I guess the other thing that I think here is, 16-year we're at $90 a pound for U3O8. So a couple of things occurred to me here. The main thing was I thought, well, okay, the higher that the price of this uranium goes, the more likely, in my opinion, there is to be more mines opening production, and it becomes more profitable to mine. So maybe some of the mines that weren't profitable to mine at lower valuations might open. Could be, I don't know. I'm not really thinking particularly about that, but I think that's maybe something to keep in mind, because as it becomes more and more profitable to mine, I'm guessing that more and more supply will come into the market to meet that deficit in demand. So anyway, that we'll leave that for another time. But I just thought it was worth, probably anyone who's holding this stock would have already seen this and know all about it and probably know the ins and outs. But like I said, it took me back to the chart and just let me look at things with fresh eyes and just thought, okay, well, what can we see? So let me just jump over to the charts, because I think there's a couple of things here of interest. So we're just out here on a weekly. Now, I don't want this to turn into a full-blown whinge, but obviously a lot of people just think that charts, technical analysis and everything's got to do with it's a load of rubbish. And that's if that's your view, that's fine. Personally, I think there's something in it. That's why I sort of do this. I think it gives us logical points to make decisions about what we want to do in the market going forward. So I'm not saying it's the be-all and end-all. I never would, but I'm just what I do is I try to use it to give me a framework to make decisions about where I think points of interest lay in the market. So when I look at this on a weekly, the obvious point is for me, well, I would just go back and look at, okay, so we've got two pretty big highs here where we've had some rejection. What does that tie into? Now, very basically, we look left, and what do we get? We go back over time and we've got areas of rejection up here as well. These are the last highs that got rejected before we plunged away to find the lows. So we've had one test, or maybe call it two tests of this area, and so far we have not been able to breach it. But what I would do is go, okay, well, we can see that the market's resisting these areas. What would be the most logical points for the future that I might want to look at to see if it's worth taking some profit here or waiting for these to break, depending on what you want to do, but what looks logical. And so for me, I would just go back, I would look left, I would just look at these big areas where the market's rejected, and I'd just take a note of them, okay, and just draw boxes around them, extend them off into the future, and if price gets up there, that's just a reference point, okay, to make me think, okay, well, what's going on here? Where are we at? How's price look? How's the market look? This is an area of interest. This is where the market's respected previously, because the market has memory. Okay, now coming into this, I would get, even looking at this, let's ignore all this. Okay, let's just put that out of our mind and let's just concentrate on this. Okay, because I think this is something that's interesting. That we can use at the moment to give us a bit of context. All right, so what can I see here? Well, I've just moved in a bit closer for a bit of clarity, but there's an argument, and I've made it before, that maybe you've got a 1, 2, 3, 4, 5 Elliott wave pattern. Now, I'm not in love with that. I don't think this is impulsive. What I think we've got, okay, is I think this lends itself more to being an A, B, C to make a three-legged wave. Okay, so 1, 2, 3 like that. All right. So with that being said, I would sort of label it up like this. I'd probably call it WXY. I think it's probably semantic, but I think the point remains. I think this lends itself more to three waves. So you might be sitting there going, so what? Your Elliott wave, it's all bullshit. But what's happened here? Well, the first thing I'd do is look at this. So what do we got there? We've got a pretty good retracement in what I would consider three waves. Okay, back to 50%. So what? Okay. Well, what can I do to convince you that TA is all bullshit? Well, look at that. So what happened here? We had a rally, a three-wave correction, and then we bit back to 50%, and then we had another rally that went almost exactly 100% of the first leg right up into old resistance. Okay? So what? I mean, maybe that was just a fluke. And you know what? Maybe it was. But the point being is that this sort of stuff we see all the time, and that's what gives us our leaning post. Okay? Now, to take profit up here would have been obviously a good thing. But there's more going on here. So let's just remove some of this. Okay, like I said, to take profit up here wouldn't have been a bad thing. I mean, and it's very easy to say that in hindsight, but what else has happened since? So, well, let's just take the bottom of this and then just bring up the retracement. And what have we got? We've come back here. Remember, this was made before the high. So we've more or less held the 61.8. We've done it twice. Okay, we've held the 61.8% retracement. So that, to me, would set up a pitchfork trade. I mean, you could take it off that, and you can see here how the geometry is just playing into that, but you could probably take it off that, right? And we're just holding the geometry at the moment. So the point of this is that as long as this pivot holds, there's an 80% chance that we hit the median line. Okay. When? I don't know, of course. But that is just the general premise, all right? So look, a lot of the problems, especially through sort of 2022, is that all this pattern here was very difficult to decipher, okay? It was pretty horrible. When you just pull it off to the side like this, it didn't have great form. There wasn't much in it to give us a lot of clarity as to what it was, okay? And that's, you would think that is part of one wave, that we got this sort of triangle-y sort of action, and that is part of the last wave. So that would be kind of how I'd break it up. But in looking at, I would look at that and go, well, that's 1, 2, and that's the three-wave swing. But, you know, that was problematic because the third wave had no balance to the first wave, and it didn't even take the low out. Usually you'd like to see that. But you just got to deal with what the market gives you, and what the market gave us was this, which was awful. And we had to wait until it cleared, okay? And now I think it has. So in terms of building the Elliott picture around this, I would think that we've got something like an A wave, this horrible looking B wave, and that we're putting in the process of a C wave. But I would also think that the way that this looks, that I think what we've got is a W, an X, and a Y, like that, the same thing as this, okay? But the scale is different. Now, part of the thinking here, I'm just in here on a daily, is that I think it's actually reasonably difficult to make this an impulse. It's not very clean. Some of the other stocks are much cleaner, but because we got this action here, I think if you were trying to make this an impulse, you have to make this wave one, and we've had the overlap, so it sort of disqualifies it for me. I think it looks much more likely to be an A, a B, and a C wave up like that, a three-wave pattern, rather than a five-wave. So that being said, I think what's come back here is three waves. Okay, that looks pretty clear to me, three-wave back. But, you know, obviously today we got that news that propelled us up. So it's, you know, it still remains to be seen, but we obviously need the market to go higher from that. But it becomes about the setup, right? So what does that mean? Well, we'll just go back out to the big picture, right? And what do we have here? Pardon me. What do we have there? Right. And we just mock this up how it was. Okay. Now, what have we got here? Now, does that mean that we're going to come up and test these tops again? Well, I mean, we could, of course, but the point being is that this pattern looks like it wants to repeat, right? Not exactly. That's why people who use fractals, you've got to be careful using fractals because they're not the be-all and end-all. But the point being, the problem here is that the start of this is a lot different from this. That's why I'm not drawing too many parallels with it. But that pattern in the middle looks pretty similar, right? Pretty similar. So would that mean that's the top of energy fields? Well, not necessarily, because remember of that bigger picture. Okay, and the bigger picture is this one. Okay, and then I would be looking for, well, actually, I'd probably off that, I'd probably more be thinking about the measured move, which would put us up here. So even looking at this measured move now on the big picture, where does that measured move come in? Well, there's not a lot of confluence there. It's between the 61.8 and the 100. So does that mean that it's going to go further? Well, of course. Of course. I mean, look at this confluence that sort of builds up the top here. Let me clean this up. So this move to this move, 200% of that sits right up here, okay, into this box. 100% of this move, okay, so what I'm saying is if this went 200% up to here, okay, that would line up with 100% of that, okay, and that would take us beyond the measured move. But what it also does is it comes back and it ties into these tops. So what that would mean to me is obviously we need to clear this zone of sort of $11 to $12. But what it would mean to me is if we did get through there, my points of call would be $13.80, and then I'd be looking at $15 sort of 40. And if the market did manage to get up there, I'd be putting all this together going, there's a lot of reasons to be taking profit or to think that the market might stall here. That's just how I would lay it out in a technical sense. Okay? But even just looking at this near-term one, okay, it's a good setup in so much as you come back, you've tested into this little zone here, we've just held the 50, we've got some more sort of fundamental style news which has driven the market up, and of course we do need things to keep going, but it becomes a setup. And what have we got now forming here? A pretty nice trend just in the short term. Okay, now you could actually make that a trend channel, of course, but I mean that's just held very, very nicely. You could sort of do this. I mean, you've got more touches there, but it's sort of been broken. So what I would suggest is you could look at that, but obviously the bottom side of this trend channel is more important. Now, what else did we get? Well, it's a little bit hard to see here, but let me just blow this up so we can sort of see this. Is that we got divergence in the RSI. Okay? So like I said, not the be-all and end-all, but as the market made a lower low, the RSI didn't go with it, which was just a warning sign that the velocity of the sellers was running out. Okay? So this could still all be blown out of the water. Most definitely could still all be blown out of the water. But as things sit, the odds look pretty good, at least to me, of a good trade. Okay, and you could even pitchfork this up and just look for, well, wouldn't that be nice? 10th of April, 2024. I'm not going to make a prediction that's going to happen, but, this is how you put it together, or this is how I put it together anyway when I look at all this. Okay, so let's just see what transpires, but just technically, there's a couple of ways you can break that down and a few points that you can look at. So look, thanks for watching. Tomorrow, being Saturday for me, I might just focus on Cameco, because I think there's something else interesting that I haven't talked about before going on in Cameco. So I like to try to bring you something interesting, something you're not seeing from the other sort of more propaganda style presentations where people are just blindly long and not looking at just the actual price structure. They're just like, it's just going up, it's going up, it's going up. And if it's not going up, well, I'm just going to shut my eyes. So if you want to do that, that's fine, man. Just find one of those channels. There's a million of them. I'm just trying to like point out technical stuff that I think looks interesting, and hopefully it's of some benefit to you. So thanks for watching. We'll see you next time. Bye for now.